Yes, you're absolutely right. I mean, the savings rate in China is enormous. The estimates say that, and again, I always qualify these statistics, but there is little doubt that in China the household savings are enormous. I mean, the statisticians say that they amount to 35% of GDP. Now, that's the equivalent of $6 trillion. $6 trillion every year. It's no longer going into property. If you look at the sort of Shanghai stock market index, that certainly doesn't enthuse anyone. I mean, it's been in a bear market for 3 years, apart from this year when it's actually picked up a bit. But that's not likely to enthuse the housewife, if you like, in Shenzhen or wherever. So where does it go? It goes on to bank deposits, and they're lowering the interest rates because they're trying to stimulate the economy. I mean, the Chinese have a touch of Keynesian fever, I think. But the important thing about this is that this money, these savings are likely to flood into gold. Why? Because there is really nowhere else for it to go other than bank deposits, which are now paying even less.
Yeah, it's a great point. Maybe you can go into gold now, because I think it's something that no one seems to be talking about it, even though it's at all-time highs. Why is that? Why do you think that's the case?
Well, it's I think it's an extremely good question. I don't think I've ever before seen something which is widely circulated and quoted on markets, which hits new high ground without public participation. I mean, the answer is that the public participation is there, but it's in countries like China, India, and other Asian nations. It's not here. I mean, we've been liquidating ETFs as savers, if you like, in this country, or investors in this country. It's all part of everybody being fast asleep. They just don't understand what's going on, Anthony. I mean, they're asleep. Wake them up, shake them by the shoulders. But what it does mean, I think, is that you've got buyers, sellers of dollars and sterling and euros and whatever. They have yet to sell their own domestic currencies and buy gold, and it'll happen. And it'll happen probably at a far higher price.
Yeah, and that's when you see, if you get the sort of crash, the debt crash, as well as the currency crash, they're going to start trying to flood into these precious metals.
Yeah, you get. I mean, there are two stages in this. I mean, we're seeing the first stage at the moment, and I think the best example of it is the People's Bank of China. Everybody thinks that the People's Bank of China has been buying gold. They got it the wrong way around. Actually, what they're doing is they're selling dollars. So they're trying to get out of dollars. Now, there is a political element in that, sure. But the Chinese can see exactly what's happening. I mean, the debt trap, which I've just described, the Chinese understand this. They're not idiots. The Russians understand it, and they're just watching the whole thing about to topple over. And nobody wants to get blamed for the whole thing falling over. But the foreigners in particular understand that you've got to sell dollars. So what do you buy? Do you buy euros? Sterling? Not really. I mean, you might get out of dollars into some of that stuff, but it's in exactly the same trap as the dollar, just maybe not quite so bad in some cases. Where do you go? You go into gold. Why gold? Gold is legal money without counterparty risk. All the rest is credit with counterparty risk, particularly fiat currencies. I mean, what you have with the dollar is it depends entirely on the faith you have in the US government. Foreigners' faith in the US government, is this something that is likely to persist? I think foreigners at the margin are beginning to doubt their faith in the dollar. And I mean, it always starts with the foreigners. They're the first to understand that they shouldn't be holding a fiat currency. The residents of a country who use the currency don't actually appreciate this in the initial stages. They will do a double take on this, and they will think, well, you know, prices are rising. This is terrible. They don't actually connect it with the falling purchasing power of their currency. But when they do, then the currency is toast, it's had it, it's finished. And that, I think, is the next stage.